transaction banking is going through a significant amount of change at the moment, and SWIFT is starting to open up its network to more participants. What does this mean for the industry?
I think it means quite a significant shift in what's going to happen over the next year or two. For a lot of corporates and a lot of banks, they have to react to these transformational changes that are going on in the market. For banks, they have to look differently at how they service their client needs, and for corporates, who are the buyer of those services, they have more choice. One of the things that is at the center of this is utilization of the SWIFT network and SWIFT standards that support a range of financial messaging to see how this benefits both the banks and the corporates as part of this transactional change.
What are some of the requirements for corporates?
For corporates, they're looking to more effectively manage their cash. That's a basic requirement, but it's becoming more sophisticated as we work through the economic crisis that we're dealing with, and as regulations surrounding corporates and the banking industry heighten. What the corporates want to do is to ensure that they can manage their cash more effectively, particularly across the trading areas that they operate in. And they don't necessarily want to be so totally dependent on a few banks and the proprietary services that they offer in order to promote their services and their products. So they're looking for degrees of independence to that. They're looking for control over their relationships more effectively than they've been able to achieve that in the past. And they're also looking to clearly manage their cash and liquidity positions, but they're looking for value over and above that as well.
I mean, what has been the take-up of small to medium-sized corporates for the SWIFT Service Bureau?
I think it's on the cusp of change. I think the reluctance by the banks and SWIFT itself to open up its membership until fairly recent times, and then only to certain types of organizations, well, that's changing quite significantly. And SWIFT has a stated aim to increase the number of corporates that engage with SWIFT, that connect to SWIFT and are members of SWIFT, and to drive up transaction volumes as a consequence. Indeed, they've announced that by 2015 they have a minimum requirement for 5,000 corporates to be using the network. And that's going to drive up from a relatively low point of 700 today.
So what are your predictions for change for this year?
I think this year is one of assessment and evaluation, with some changes because we've already seen a degree of consolidation in the Service Bureau market. The Service Bureau market clearly is an economic way of using a third party in order to connect to the SWIFT network. It's very costly, it's very complex, it's hard to maintain, so outsourcing that to a third party is an effective means of achieving management of your relationships via the SWIFT network, but that also brings challenges and problems. The economic model for some bureaus who operate entirely on providing a technical connection to SWIFT is not a sustainable one, nor is it one that offers the value that the corporates are seeking now in order to govern and manage their relationships more effectively on their terms. And for SWIFT it raises the challenge, because to drive up the usage that they're proposing, they are dependent on the pivotal bureau service market in order to achieve this. And yet it's relatively low entry cost to become a service bureau. And I think the regulation and governance around that market needs to be increased, and I think that falls firstly on SWIFT to drive that debate.
Excellent. Thank you very much.
Thank you.